Hey YouTube, this is the Robinhood Investor. Today I'm going to talk about Procter & Gamble, which reported earnings before market open. Procter & Gamble, ticker symbol PG, currently priced at $162.93 per share. It popped 3.95% after reported earnings. Past year, up 20.06%. Past 5 years, up 94%. Make sure you stick to the end of the video to get my opinion on this stock. Scrolling down a bit, you can see that Procter & Gamble, they're in the consumer packaged goods business and are in the following markets such as beauty, grooming, healthcare, fabric and home care, baby, feminine, and family care. So a lot of these are personal goods, consumer packaged goods. And taking a look at the dividend yield, it's at 2.13, P/E ratio of 29, and market cap of $394 billion. So it's great to see Procter & Gamble at the size and still growing. And taking a look at analyst ratings, 54% give it a buy rating. Taking a look at the financials, you can see annually it's been steadily growing year after year. Look at the green bar from 2018 to 2021. And the blue bar in terms of earnings, it's also steadily growing. So it's great to see that kind of growth for both revenue and earnings, profitability. And for quarterly, you can see it's also steadily growing quarter after quarter. Taking a look at the buy rating, it's 2.4, so between buy and hold. Analyst price targets out of the 21 analysts, it's currently averaged at $158 per share, which is slightly below the current price of $162 per share. Taking a look at the actual earnings report from today, January 19th, 2022. So what Procter & Gamble is doing is focusing on the health and safety of the world, maximizing the availability of the products, and supporting communities during the current climate. And a lot of their strategic focus areas include working on the portfolio, superiority to win consumers, productivity, constructive disruption, and focusing on agile organization. So some of the highlights from the quarter were that they grew more than 6%, driven by volume and pricing. And each of the 10 product categories grew or held organic sales this quarter. So it's great to see that kind of growth even at this size. And their aggregate market share grew 60 basis points. So also looking at the sales growth, as I mentioned, 6%, volume growth 3%, core earnings per share growth 1%, and currency EPS growth 2%. Cash flow of 106%. Look at the organic sales growth. Q2 results, you can see quarter after quarter, it's been steadily growing. Compared to a year ago, though, it's slightly lower in terms of growth, but overall it's still growing. Taking a look at the EPS growth, it's been growing in the recent quarters, but more recently it's been slightly lower. Now taking a look at the global market shares, you can see that it grew or held their share for the top 50 category country combinations. So business segment and highlights from the quarter, you can see that beauty segment, organic sales of 2%, net earnings down 1%. So it's good to see that kind of growth, but earnings went slightly lower. Grooming segment, organic sales of 5%, net earnings of 5%. So it's great to see that kind of growth. Healthcare segment, this is very good growth. Organic sales of 8%, net earnings of 7%. You can see that their costs were slightly higher, whether it's freight costs or investing in the brand communication. Fabric and home segment down up 8% in terms of sales, but net earnings down 9%. Volume pricing was offset by significant commodity and freight costs. So yeah, with increased costs, that definitely impacts their earnings overall. Baby, feminine, and family care segment up 5%, but net earnings down 12%. Same story, pricing and volume were offset by significant commodity and freight costs. Now taking a look at the guidance, so you can see on this screen, a lot of the products are recognized from Tide to Gain, Pampers, Bounty, Charmin, Dawn. A lot of these personal hygiene, cleaning, consumer goods products are well recognized and continue to have a strong brand. Overall, in terms of their future guidance, sales increase organic sales by 4 to 5%. All-in sales growth 3 to 4% increase. Includes a 1% negative impact from foreign exchange. So overall, this is very optimistic future outlook for Procter & Gamble. Take a look at the earnings per share. Maintain the core growth of 3 to 6%. And then also all-in EPS growth 6 to 9%. So overall, it's a very positive future outlook for earnings and sales guidance. And for the cash generation and usage, increase free cash flow productivity 95%, capital spending 4 to 5%, dividends of over $8 billion paid back to shareholders, and increase their share repurchase from $9 to $10 billion. So it's great to see that Procter & Gamble increasing their shareholder value by paying back dividends as well as buying back shares. And it just shows that they're confident in their company outlook as well as the business outlook. So a lot of the potential headwinds are not included in the guidance. So even though they're very optimistic, we'll see how things pan out. So that's all for Procter & Gamble, their earnings. In terms of my personal opinion on Procter & Gamble, at one point I did hold Procter & Gamble stock, and I sold at about $82 per share. Currently, it's at $163 per share, so I would have doubled that value, equity value, if I held. But I don't plan on buying any Procter & Gamble anytime soon, but I do plan to continue tracking it just because I think it's a very good dividend aristocrat. So it continues to increase its dividend payout, as well as there's capital appreciation is also pretty solid. I do have some exposure through ETFs, exchange traded funds, in my diversified funds portfolio, but I don't plan to open a Procter & Gamble position anytime soon. That's all for this video. What are your thoughts on Procter & Gamble? Comment down below. Remember to use my referral links below, and both of us get $20 for using personal capital or a free stock for using Robinhood. If you like this video, give it a thumbs up, and if you want to learn about investing, subscribe to this channel. See you in the next video.